Like so many parts of our economy, the oil and gas industry has imploded. As we shelter in place, our demand for energy has plummeted. In early January, Texas oil was trading at $63 a barrel. Now it's at $21. Scott Sheffield is the CEO of Pioneer Natural Resources, a huge player in the Permian Basin.
We need $30 to survive. $20, you'll have 80% bankruptcies, 250,000 employees laid off. $30 is what I call we're crippled, but at least the industry will survive, waiting until the virus ends and demand picks up by the end of 2021.
Pioneer wants the Texas Railroad Commission, which regulates oil and gas in this state, to force all Texas producers to cut production by 20%, hoping that less supply will prop up prices. But during online testimony today, the majority of the big players in the industry say they prefer to let market forces play out instead of government intervention. Ray Caruso is a former director of the United States Energy Information Administration.
The fact that the Railroad Commission's even having this conversation, how significant is that?
I think it's very significant. I think it shows that how desperate the situation is that they would even consider this.
It's not clear for now that there are enough votes to force a cut in production, but companies like Pioneer say at this rate, by summer, the U.S. will run out of storage to hold all of its excess supply of oil and gas. In Dallas, I'm David Schechter.